Now let's take this question. A firm can enhance its value by A. Increasing working capital, B. Increasing capital expenditure, C. Decreasing cost of capital, D. Increasing debt. This is a situation concerned with finance management and not to the corporate resolution IBC code. Let me explain you in simple terms. The value, that is the object of any finance management, is value maximization. A company, when it is established, the object is to make profits, and that is what profit maximization. Now, company wants to earn profit on a sustained basis. That you can earn profit only if you take the interest of all the stakeholders. So, if you take a company like Hindustan Motors, Ambassador Car or Fiat Car, both the companies died when the competition came. They were minting money, but they were not bothered about the stakeholders like customers, creditors, employees. Crude management techniques they followed and they lost it. So today it is agreed that a company, when it comes into existence, it has to have a very strong goodwill, ethics, good customer base, everything. You have to satisfy the stakeholders. Earning profits by taking after the stakeholders' interest is called as wealth maximization and then value maximization. So ultimately, profit is the driving force. You do all the things without earning profit, then nobody will care you. So what is the profit? The profit is difference between revenue and cost. Or in financial terms, when you invest money, you expect a return. And that return should be more than the cost of capital. Suppose I am getting 30% return on funds employed and my cost is 20%. So, naturally, the return on investment, that return on funds employed is 30%, cost of the funds employed is 20%. I will make only 10% margin. But suppose I work in such a way to reduce the cost of capital from 20 to 10%, naturally, my value will increase. That's the knowledge. Now, coming to that, increasing working capital is one facet of management to see that the business is done smoothly. So, what is increasing working capital? Working capital is a optimum concept. Neither more capital nor less working capital. So, it's a vague question, A. Second, B. Increasing capital expenditure. That is also a vague question, because if you already have capacity to produce goods and you are not doing it, what is the point in increasing the capital structure? So, capital expenditure, it is a vague question, wrong. And then increasing the debt. Increasing the debt will increase the risk. That has to be checked it. Ultimately, this is the answer. Decreasing the cost of capital, as I explained. Therefore, the answer is decreasing the cost of capital. Now, this is another question. Common sense and other topics not connected to this thing. They will come 5 to 10 marks. Which among the following is not an essential feature of IFRS converged into Indian accounting standards? You can do common sense working. First step is applicable to separate as well as consolidated financial statements. Yes, it is a essential feature. Then giving this one is an essential feature of this conversion. Second is give more importance to the concept of substance over form. Correct. That is also essential feature only. And disclosure of all relevant information and assumption, that is the main thing. So then the left is ABC is not, ABC all are essential ingredients. So C will be the answer. But C is measurement, not based on time value. Everything is measured on the basis of time value of money. Future, all future flows have to be measured on the basis of time value of money. So this is the answer. So one way is to see the common sense and eliminate them. And this question is subject to easily elimination. Because whenever your cash flows or future is to be measured, cash flows or valuations or profits, it is a discounted value. What is present value of the discounted cash flows is the valuation. Understand? So the cash flows have to be estimated over a period of time, applying the constant dividend growth model. And then there are two types of flows. It's next 5 years, what is the cash flow, and discount them to the present value, and thereafter what will be the capitalized value. Suppose if you have an share debentures, what is the value of a debenture which is matured after 5 years? The interest income that you get every year, discount it to the present value. That is called as present value of the cash flows, regular flows, plus the capitalized value. At the 5th year, they may pay back that principal value either with redemption, premium on redemption, or this. So that also to be taken. Now when you go to the shares, then you will have uncertain. So the dividend, the constant dividend growth model you will use, and what is that dividend expected for next 3 to 5 years. Thereafter, expect the normal growth rate in the dividends. So there are two types of cash flows for valuation of an asset. One is the yearly flows and another is the redemption flows. So discount both of them to the present value. Therefore, time value of money becomes very important. So not based on time value of money is a clear-cut answer, because a negative question one has to be very careful. So let's take this problem issue. Balance sheet of a company does not show remember, not show what company owes and what company owns. So obviously this is what balance sheet is about. Asset side is applications, liability side is sources. So sources have to be paid, the company has to pay back, and assets are what the company can realize. So question A cannot be the answer, because that's not balance sheet means this. Second is further same explanation. Balance sheet means assets and liabilities of the company, we all know. And the net result of assets minus liabilities called as net worth, which is also called as financial health of the company. So all the three are what the representatives of the balance sheet. But a balance sheet is not going to have income and expenditure of the company. So the D is the correct answer. Very, very simple answer. So this question is an important question. Which of the following is not true? An insolvency professional must not engage in any employment. An insolvency professional must refrain from accepting too many assignments. An insolvency professional must not accept gifts which undermines his independence. An insolvency professional must not accept more than one assignment from the same corporate applicant in a year. Now, we have a model code of conduct for this first schedule. We have to refer. That is under regulation 7 subsection 2G. You have to study. The whole concept of insolvency professional is he should be a person of high integrity, independence, knowledge person, and space, etc., etc. will be there. Now, if he engages in any other employment means master and servant relationship will come, and therefore it will affect the independence. Obviously, he should not engage in employment. So, insolvency must not engage in any employment should be the correct answer. But anyway, let us see the other ones. An insolvency professional must refrain from accepting too many assignments. Generally, it is only guidance, because you cannot do too many assignments, but nothing prevents them. But because if you do mistakes or something wrong and there is a complaint against you, there will be a problem. So, it is not mandatory that it is there. The act doesn't say only 10 assignments at a time you should have, not like that. So there is no bar on this. So it is B is not correct answer. And then insolvency professional must not, naturally should not accept any gifts. And insolvency professional must not accept more than one assignment is wrong. So which is insolvency professional must not accept more than one assignment. You can accept any number of assignments. Operational creditors are there. You resolve that one, then he will give the next one. Naturally, he will trust you. He is like a doctor you are for them. So all these three are wrong. Then what is the correct is not true is A is not true. Friends, one important point you see. An insolvency professional is actually registered with IBBI and also the professional agency. Now, sometimes he may decide to surrender his certificate or practice this certificate. And surrender, if it is accepted by them, during that period of surrender, you can always get employed. That is also a point which you should remember. But whether to accept your surrender or not, and is in the hands of the IBBI. So that point also to be kept in mind. So if you see the first schedule, you will get a picture in this thing. Okay.